You don't have to worry about that. The only thing you probably need to pay upfront is when you need to value a property, you need to pay a third-party valuer to do it. This is the fee you pay, you need to pay upfront. Other than that, yes, there's all the fees are taken from settlement. So unless you actually take the loan, you don't have to pay all these fees. And other than that is the translator fee that I mentioned before. So if your documents is not in English at all, you do need to pay a fee to a level 390 translator. Oops. Cool. What are the procedures that I need to follow in order to obtain my finance and settle my loan? So this is just basically this for clients that probably never borrowed money in Australia before. The 9 steps are how you normally need to do to arrange a home loan. So the first thing is when you initially had a conversation with your broker or your banker, we normally grab your basic information, and we send you a checklist after the conversation to say, Mr. John Smith, this is what you need to prepare for me before I can determine how much you can borrow. With the checklist, there's a fact find form for you to fill and then return with, the stuff I talked before, pay slips and ID. After we get all the information, we conduct a preliminary assessment. So we have a look and say, okay, based on your information, based on your situation, a bank is probably works best for you because they're really cheap and they're really easy to go with. We recommend a lender from there. If you're happy to take that lender, we then prepare all the documents. We give you the documents to sign electronically as well. So you sign it, return back to us. We submit the whole application to the lender for pre-approval or for full approval at this stage. The lender, once they take all the information from us, it takes roughly, from time to time, 1 week to 2 weeks to actually assess the deal. And then if they're happy with it, they provide with you the pre-approval. All right. So once you got a pre-approval, they will lend you a this amount of money. You can go house hunting. It can be a bit hard in today's market because it's just quite crazy in Australia at the moment. Once you find a house and you want to buy it, then you actually give us the contract. You sign a contract. We then conduct a property valuation for you. All right, the bank need to see, okay, this is how much the property is really worth in today's market, not how much you signed the contract for. So once they've done the valuation, they're happy with everything, they then issue a formal approval to you. The loan is formally approved, so that then they actually pass it to their legal department to work to generate the loan offer with you. So that's the loan documents you need to sign to accept the loan with the bank. At that stage, depends on which states you're actually residing, you're going to purchase the property at. Some states we can just do it digitally. You can just accept the loan offer online. And that's really nice and easy. But for some states, unfortunately, we need to post the loan offer back to you. If you're in Hong Kong, we need to post it in Hong Kong. Then you need to bring the loan offer to Australian consulate on the Australian solicitor sign and then bring it back, post it back. So that can take a bit of time. And then once it's posted back, we pass it to the bank's legal department. They check everything to make sure you signed correctly, nothing's outstanding. Then they book settlements for you. After settlements, the property is yours. All right. So they don't really pay the money back to you. They pay your loan as settlements to the solicitor at the solicitor's instruction. How long will it take for my loan to be approved? So I've basically covered that before. The time can be different from time to time. Sometimes it can be really quick. It takes 24 hours, but most of the time it takes 1 to 2 weeks, and sometimes it can take 2 to 3 months, depends on staff levels. Especially with COVID, everybody's in lockdown. That can take a really long time. But in saying that, when we recommend banks to you, we'll take service level into consideration as well. So we're not going to recommend someone who's really slow to people that we know need to get a finance urgently. All right, so we need to take that into consideration as well. But general rule of thumb, 2 weeks. Will I pay a higher interest rate for my mortgage? General answer for that is no. Some banks, they will give a higher interest rate for people who live overseas, all right? But obviously, we're not going to recommend those banks. We, as specialist mortgage brokers, we can negotiate interest rates with certain banks for our expat customers. And so your rates will be exactly the same. Your rates will be exactly the same as local Australian residents. Okay. All right, this one already covered a little bit. When do I need to visit Australian embassy and to if I'm not coming to Australia to buy the property? All right, if you can come to Australia, that'll be perfect. We don't have any travel restrictions at the moment. But if you can't, as I said, if you live in mainland, you need to bring your ID to Australian embassy or consulate for the verification. If you're in Hong Kong, you can bring to the Australian consulate. or Australian solicitor who lives in Hong Kong to verify your ID. All right, that's for the ID part. Once your loan got approved, for some states, for example, Queensland or Western Australia, you need to sign your mortgage documents in front of a consulate member or Australian solicitor as well. So yeah, so basically, you probably need to visit them twice if you buy a property in Queensland, Australia, in West Australia. Okay. In saying that, if you really can't visit any of the consulate at all, you want to apply for pre-approval, we have solutions for that. We have lenders who can do a verification via FaceTime or WeChat. All right, but that lenders is not the Australian Big Four banks. So there are smaller private lenders, they can do that. And that's really for you to, if you really cannot get your ID verified. Will the Australian embassy charge me? Yes, they will. Nothing is free from the embassy, and that can be hundreds of dollars sometimes. But the good news is if you are, for example, if you and your wife, like husband and wife, are applying a loan together, if you need to verify ID, I believe only one party can go. You need to bring the original copy, like the passport original copy from both parties, and then the certified the photocopy, and then the embassy can actually certify both copies, so they don't have to see both people in the embassy. They can just see one people, and they can certify ID for both parties. What impact will my credit card limits have on my borrowing capacity? So I've covered that before. If you have ginormous credit card limits, that will affect your borrowing capacity. All right, the banks takes 4% of your credit limit as your repayments. Even though you don't use it at all, you never touch it, it's a $10,000 credit card limit. They're assuming you pay $400 every month. So you know, if the more repayment you get, the less borrowing capacity you have, because you've got, you know, liabilities. So we always recommend clients, if you really don't use your credit card at all, just cancel them, you know, because that will bring your borrowing capacity down. General rule of thumb is 1 to 5. So if it's $10,000 limit, you basically borrow $50,000 less. Okay, that works the same in Australia. What is first homeowners grant? Sometimes we've got clients ask me, you know, all sorts of questions. I just want to quickly cover this one here. First homeowner grant scheme was introduced to help Australians to get into the property market. So they really, it can vary like from state to state, and it changes all the time. So if you really need to know the fine details of everything, you need to check with your solicitors, or there's eligibility criteria online as well. But in my understanding, like for example, I live in Queensland. First homeowner grant only applicable to people who buy brand new houses, and it has to be less than $750,000. So if it's more than that, you're not eligible. There's also other grants available for first home buyers as well. So just check with the solicitors before you apply, and they'll let you know, like for example, like your stamp duty exemptions and that sort of stuff. I'm not going to cover too much of it here. Okay, let's move on to the products. This question we got asked a lot. I'm not sure whether you've got something similar in mainland or in Hong Kong, but in Australia, we've got this really special product feature called offset accounts. In my point of view, that's a really great feature, a product feature that we can have. It's basically a separate accounts that link with your current existing home loan accounts that enables you to pay off your home loan faster, to save you interest. So basically it's a everyday savings account. All right, it links with your home loan account. For example, if you home loan, you owe the bank $1 million, you put $500 in your offset accounts, you only got charged the difference between these two accounts. You only got charged the interest on the remaining amount, which is $500,000. Okay. So example of how offset account works is if you had a home loan of $500,000 and offset accounts of $100,000, the bank will only charge you the residual balance of $400,000. How does it compare with putting the money in a term deposit or like a higher savings interest account? Let's say if you pay 3% per year interest for your home loan, and the bank savings account probably offer you 1.5%. If you were put $100,000 in the savings account, the savings account offer you 1%, which is pretty much how much we offer in Australia. If you were to put $100,000 in the savings account, you would earn $1,000 interest in that year. However, if you leave in $100,000 in offset accounts, you would save $3,000 in interest. Okay, that means $3,000 per year better off to put in offset accounts. On top of that, sorry, actually 2,000. That was a typo there. Excuse me. The ATO, Australian Taxation Office, would actually tax you on the $1,000 the interest you've made. So there's other tax implications on top of it as well. So if you've got money, it will be better off to put in offset accounts in most cases. The vast majority of lenders, can I get fixed rate? Sorry, can fixed rate loans have 100% offset accounts? The vast majority of lenders do not allow 100% offset accounts for fixed rate products. So most of the cases, if you want to have 100% offset accounts for that flexibility of paying extra, save interest, you need to have a variable rate products. Some cases for fixed rate products, you can have a limit of paying extra into the loan, but you cannot take it out for most cases. All right, so you can pay extra, you cannot really remove it. So 100% offset is much more flexible because it's the same account. You can leave it there and you can take it out any time of the year. All right. This question is, what is the comparison rate? So you probably seen that a lot in Australian marketing, home loan marketing. Whenever you see a home loan interest rates, there's always a comparison rate right next to it. A comparison rate is basically the interest rate after taking consideration of certain fees and charges relating to the loan. So it help you to identify the true cost of the loan. The way the bank calculates comparison rates can be slightly different from bank to bank. So it's not really objective to compare comparison rate among different banks. You'll be better to compare comparison rate with different products within the same bank. But in saying that, they still don't really cover all the possible situations. So it's not really taking consideration of your personal circumstances. Just give you a reference rate out there. Is there a fee to make additional repayments in Australian's product? If it's a variable rate loan, it generally means it will allow you to pay as much extra as you like. So if it's a variable rate loan, you can pretty much pay off in one day if you like. Okay, but with the fixed rate products, in most cases, 99.99% of the time, you cannot pay off the loan within the fixed period. Okay, you do have to wait until your fixed period expires, unless you're happy to pay a penalty cost. We call that economic cost, and that can change from time to time. Sometimes you can pay only like a few $100, $50. Sometimes that can be tens of thousands of dollars. So it depends on how the economic actually moves. So our recommendation is, if you do have the plan to pay off the loan, or you have money to 100% pay off the loan, you just want to have there for rainy days, have a variable rate loan instead. Can I lock my mortgage interest rates between now and the settlements, especially with our interest rates goes up every week, sometimes like now. We got asked a lot of these questions, like, can I lock my mortgage interest rates? Yes, you can. Bear in mind, if you don't lock your mortgage interest rates for a fixed rate product, okay, if I'm applying a fixed rate product at the moment, it's 2.9%. The loan takes 30 days to settle. By the time it settles, the interest rate goes up. Okay, the bank adjusts the fixed rate to 3%. Your interest rate will be locked at 3%. Okay, so the interest rate is not locked until you apply for a rate lock. A rate lock is a feature that allows you to actually lock the rate when you apply the home loan. But in saying that, if you want to take advantage of that, you do need to pay a fee, which is normally 0.15% of the loan amount. So if the loan amount is $1 million, it's $1,500. Okay, we do have some lenders that have discount on that, and we recommend all of our clients who are taking fixed rate products to lock their interest rates. Okay, to pay this fee, because interest rates is changing every week at the moment. Okay, that's it for me today. Is there any questions?
Okay, thank you very much, Sophia, for your explanation. I think we do have a lot of some of questions asked here.
Cool.
I already gathered them prior to our section.
Oh, cool.
Just to share, I actually worked as a conveyancer when I came from UK to Australia. First job was conveyancer. You can see why I'm not working in a law firm anymore, because it's really hard to calculate these fees and home loans and how much they own to the seller.
Yeah,
it's very difficult. And now I'm doing migration, which means I'm not really good on that. And so even for home loan, it's really complicated. We have, however, some of Frederick asked here, what was the most challenging case you had handled for customer and finally you got the loan? So the very challenge, but you managed to get them to get the loan for them very large amount.
Oh wow. To be honest, for a mortgage broker,
Yeah.
every case is challenging.
Everybody wants the most.
Yeah, we don't. As I always said to my banker friends, because I'm from a bank background.
Yeah.
Lots of friends who still work in a branch. We always say the easy customers go to branch first, and then they probably got rejected. Yes, the person got rejected from the branch is saying, "Oh no, we can't help you." And then you probably talk to her. She's
okay.
Yeah, we got those a lot. So I have to say, yes, and especially with Australian lending policies, they pretty much regulations get changed all the time. And you probably know Royal Commission changes from 2019. They're scrutinizing all the lending policies. Stuff just getting really challenging. But enough whining. The most challenging cases I've ever dealt with are definitely some of my self-employed clients in Australia.
Like myself, right?
Gosh. The way, especially how accountants set up their, your one's not too hard, honestly. Like how they set up their structures can be really complicated. They can get multiple hybrid trust, unit trust, or tracing money from each other, and that can be really challenging. And sometimes make that presentable to the bank and get the bankers to understand, because they're not professional accountants, and they probably don't have a tax background as well. So to get them to understand where the money is flowing, that can be really, really challenging. And but that's very interesting as well. You feel so very challenged and happy as well at the same time once you be able to get a loan approved. Feel absolutely satisfied. Yeah.
Right. Okay. Awesome. So some question might be not relevant to you, but some people ask that, why do I need to take a home loan if I have enough cash?
Yeah, that's a very good question. I know most of our clients
will have
that issue. Yeah. That's a very good question. We actually we have some clients who probably never think about getting a home loan, and they just purchase it by cash. And 2 or 3 years later down the track, and they came back saying, can I do a mortgage on my house? And I'm like, what do you mean by mortgage on my house? Because I know in mainland, we have these special products where if you have a house unencumbered, you just give it to the bank, and then the bank give you some money without assessing your income. I'm not sure whether it's still the case, but we don't have any products here in Australia, which means if you buy the house outright, if you need money later on to do anything, we need to submit a new applications anyway. So we need to go through this process again. We're not going to be able to just, you give back the bank the property, and we'll just give you the cash. We're not going to be able to do that. And then the criteria can be even harder, because when you purchase the property, all right, the purpose of you borrowing the money is very clear, because you just need money to purchase the property. But when you when you got a property already and you need the money, for example, to run a business, or you want to buy like a really luxury vehicle, or like a yacht, or whatever reason, the bank can be a bit doubtful about that. They need to see evidence of why do you need the money. Okay. For example, if you need the money to run a business, the bank may say, no, I don't want to give you the money, because
the risk is higher.
Yeah, you may fail and you may not be able to repay. So at that time, it can be even harder to get the money. And then the second thing is, if you borrow the money at the moment, you've got the money, as I mentioned before, with the offset accounts. If you just leave the money in your offset accounts, right, you're not paying any interest to the bank at all. So the bank's not getting anything from you, but you've got this sort of giant credit card sitting there with only charge you like 3% interest. That's the lowest consumer rate you can get in Australia. Okay, if you want to get anything, like if you want to get a business, if you want to buy a car, I guarantee you the interest rate you get will be higher than that. So you can, if you need to buy a car later on, you can just take the money and buy the car. Okay, and you just can take the money, get a cafe or whatever you decide to do, and you only pay 3% interest rates, and that's how flexible it can be. So that's why I always recommend clients to set up the structure correctly initially when they purchase the property. Get an offset account, 100% offset. If you don't need the money, leave the money there. You're not paying anything. You probably the only thing you pay is the annual fee of $300 or something. Sorry, my dog is just coming. And that's it. And you've got this giant limit there you can use anytime.
Right. Yeah. So the good idea, it's actually, Sam just said, interesting. Yes, Sam. The best idea, it's actually borrow as much as possible. But if you have more money, you can put into offset. Because you're not paying interest anyway. And then the interest, which is a lot higher than the bank will give you if you put it in your saving account. I don't think any Okay, bank will give you 3% in Australia. No, not possible.
If you guarantee, if they promise to give you 3%, don't put there. There's some.
Don't put there. It's going to be kind of too risky.
Yeah.
1%. It's actually very generous.
Yeah.
Okay, very generous. We put a 1%.
Yeah.
Okay. So Jeff asked a question saying, "Is there any borrowing limit for sole proprietor? What do you mean? Is that meaning are you self-employed? Someone who's a sole trader. What is the
Sole trader?
Yeah, in Australia we call it sole trader,
Sole
right?
trader. Yes.
Sole trader, perhaps they don't have a company. So you don't have a company, right? Jeff, is that your question? You don't have a company, like you don't register company, so you're a director of the company. Or are you saying you are sole trader? Maybe we'll just say sole trader, have someone.
Yeah, sole trader. That would be it.
Okay, thank you, Jeff. Yeah.
Okay, thank you, Jeff. Yeah. Yes, the borrowing limit for sole trader, you wouldn't have less borrowing limit. If you're in Australia, okay, so if you obviously it's Hong Kong, if you're self-employed, that can be a bit different situation. But if you're in Australia, if you're sole trader, or even if you're a company director, your borrowing capacity we calculate exactly the same. But the key difference is how we collect your income, how we calculate the income. Because if you work for someone else, it's very easy. Your base pay is $100,000 a year. That's it. We use it. But if you work for yourself, for example, if you're Australia, you register ABN, we need to see how long the ABN has been registered for. Most cases need to be more than 24 months, so 2 years. All right, you need to practice your business for 2 years. And then we need to see 2 years or 1 year, depends on the bank's financial statements and company tax return or personal tax return. So we need to see how much tax you've actually paid. And we take your profit as your income. There are different stuff we can add back. Sorry, was that a question?
Sorry, I think no. Sam.
Okay, okay. Yeah.
Sam, I think I need to mute you. Let me just check. Don't know where it is now. Okay, I think it should. No. It doesn't.
Okay.
Yeah. You can pause here, Sam, later, or put a hand on, so I will let you talk. Yes, please. Sorry, go ahead.
No, yeah, that's okay. So basically, we just use your tax profit. So that year, if you declared your taxable profit is 50,000, pretty much we just use that as your income. So for most of our self-employed clients, especially they tend to, put all expenses into their tax returns. So there are lots of deductibles they can use and to reduce your taxable profit. But in saying that, pretty much then the income we can use is much less than PAYG workers for work for company. So that's probably a good idea of you can borrow less. Yeah.
So as a sole trader, therefore, whatever put into like sole traders account, the profit is actually their income. And then if you want to be tax deduction on that, it means you don't have profit, which be problem. So therefore, some of the suggestions, one of the taxation, Eric, he suggests that if you want to run company, it's best to register company, isn't it? So they can, which means that company income and personal income is separated, unless the company is in loss. But as long as they are making profit, yes, as a director, he's paying hourly or salary to himself, then that will be used as his income, right?
Yes. If you are a company director, we can use your own income, which is you probably pay to yourself from the company, then the company income as well. So you can use both. And it's probably better off in a way than sole trader, is because the company generally pays less tax than a sole trader once you hit a certain tax margin. So if you make, I think, up to 45,000 this year, our company lost with our budget, if up to 45,000, then you definitely pay less tax with the company. So that way, you generally speaking, the accessible profit we can take is more than sole traders. Sole traders probably pay like 37%.
Yeah. I think we heard same from Eric, really. If someone want to operate your company, even just your person, as a person, yourself, you're the boss, you are an employee as well, but to register the company and then pay yourself as an employee, same time as your director, because then you have a separate income once yourself.
Yes.
Sam has a question. Sam has a question. Can I use my company in UK for applying home loan in Australia? I just told you that. So we're gonna have some question about UK property.
UK. Cool.
So Sam, are you really referring you have a company that generate income or not? Is that car operating? And then is it out operating?
Yes, it's operating. Yes.
Yeah, can you elaborate more about that? Saying how much?
Just like I have a few contracts with me, and I established the company in UK, and my that company, issued the invoice to my those companies. So that means yeah, that kind of arrangement.
Can I ask your UK, is that registered company house?
Yeah, it's a registered, it's a limited company, but it's only for arranging my salary, this kind of stuff. But it's operating.
Right, got it. So basically, his situation is that he registered a limited company in UK just to get some contractual payment through this bank account.
Yeah.
Can he use this kind of income for applying home loan in Australia? He also have a job in Australia, in Hong Kong.
Okay, so he has a job in Hong Kong. Okay, so yes, we can, but not with every bank. So because that then classify as a self-employed from overseas. Okay, from UK, it will be a bit easier to if you have the company in UK, because I'm assuming like Australian people, they're more familiarized with how the UK tax system works. But in saying that, we still need to get all the tax papers we need most recent 2 years of tax returns from UK for this company in order to determine how much income you can make. And we definitely cannot be able to submit to the major lenders. We do have to, if you have to use the income in UK, we have to go through with private founders.
So basically, for all home loans, they want to see your tax returns.
For all self-employed clients.
For self-employed clients.
Yeah.
Even they working from them companies, not sole trader.
That's right. If you work for your own company, we still need to see tax returns for the company. Yeah, only if you work for like the other people, like the multinationals.
Got it. So I just heard you mention that the difference between small lenders and big four. What is the difference then?
Well, the difference is we always try to recommend our lenders to the big four banks because they tend to be a bit cheaper.
In interest,
in terms of fees and charges as well, like the settlement fee I mentioned before. Like for example, if we recommend some of our Hong Kong clients to the Commonwealth Bank of Australia, the largest bank in Australia.
Yes.
The only fee you need to pay is $200 settlement fee and plus an annual package fee of $395, and that's it. So valuation fee, approval fee, all for free. And same for other big four banks as well. But for whatever reason, like if your income's outside the box, we have to submit it to smaller lenders. You have to pay all sort of other fees as well, so a couple of $100.
How much more they have to pay in addition?
Really,
in your experience?
Well, if you're basically $2,000 started, like all the other small fee collected $2,000, but if you need to borrow really a lot, you might have to pay risk fee, which is calculated as a percentage of the loan. So it can be 0.5 to 1% of the loan amount, so that can change.
Okay, so you also mentioned that the borrowing power is about 80%. This is a ceiling, or this is actually guaranteed?
That cannot be guaranteed. Unfortunately, this is 80%.
Roughly, they get.
Yeah, roughly.
Okay. If they straightforward, like in 4 years, then that's. But if they have other incomes, and then, okay. Exactly. So all right. What about if someone go to the Gold Coast and trying to buy a property which is $3 million, which is a nice house, and then they want to borrow as much as possible? How confident they're able to sign the sales contract if they see a really nice, $3 million?
I understand the urge of signing a contract of $3 million house in Gold Coast. Trust me. I want to do that all the time. I would definitely recommend to talk to me first.
Right. Make sure. Right. Talk to Sophia
absolutely.
First. Yeah.
I'll talk to a mortgage broker before you do that. If you definitely need the money, if you've already got $3 million sitting there, and you want to borrow some, that's fine. But if you definitely need the money, because some banks, they have a maximum product limit. So not every bank can offer a $3 million loan straight away. The big four banks, yes, they can go up to 5 mils, but for smaller lenders, they sometimes they can only go to 1.5 or 2 million. That's it. Doesn't matter how much income you generate. Doesn't matter how.
Matter.
Yeah, that's the first thing you need to be aware of. The second thing is we definitely I think, in my personal opinion, the most important thing is your income. We always need to assess your income. So if your income supports that, yes, we can definitely go up to 80% for a Gold Coast house. I think there's nothing risky about that. But if your income doesn't support that, we need to always go to the limit with your income. All right. If your income only allows you to buy 500 and 500 it is. Okay. The third thing is with Gold Coast, it can be a bit tricky. The houses in Gold Coast is fine, but with some high-rises apartments, like the ones in Surfers Paradise, sometimes the bank can treat them as a hotel or a service apartment, and then general different policies can apply. So we may not be able to go to 80%. Sometimes we'll have to stop at 70 or 60, depending on the security.
Right, so I think that's type of property as well, the borrowing power, depending on the type of property. It's if they treat not residential, then they're not going to give you 80%. Right, so I forgot a question here. Ari asked, and I heard the bank only approves if you're in the same company for more than 3 months. If I go to Australia in May and move my Hong Kong payroll to Australia branch in May, does it count as the same company? Or should I keep my Hong Kong payroll for easier approval? So, Eric, are you really referring it's the same company, just different branch? You just relocate to a different branch, or is it a completely different company?
It's the same company.
Right, okay, same company, different branch. So you'll be moving to Australia, different branch in May. The payroll will, generally speaking, they will set up payroll in Australia. So his question was whether his accounts, should I keep does he need to keep his Hong Kong payroll or just change to
Australian payroll?
Yeah.
Okay. Yep, that's a very good question. If you already come to Australia and you got paid in Australia dollars, you'll be actually easier to get a home loan. You don't have to wait for 3 months. As long as it's a permanent full-time or part-time job, it's a permanent job, we can pretty much use your contract. So if you've got a contract saying this is how much I got paid in Australian dollars, and we just need that and one pay slip, we can apply a home loan straight away based on that. That doesn't even have to be the same company. So if you just come to Australia, get an Australian job and permanent job, start one month, we can use that to apply a home loan straight away. Okay. But in saying that, I know some of our clients, they come to Australia and they take a pay cut. All right, your Australian pay can be a bit less than Hong Kong pay. In that case, it probably will be better to use a Hong Kong payroll. So it really depends on the situation.
Actually, majority of them are going to experience this.
Yeah.
They get paid more in Hong Kong.
Yeah.
Than Australia.
Yeah.
So if there is a reduced income, do you suggest them just they can negotiate with the company, because company will still pay them the same because their work will be the same.
Yeah.
The location is different, but it doesn't matter because everybody work from home. So that won't be any difference. So would you suggest them that if that's a significant difference, they will keep their Hong Kong payroll?
Yes. If there's, I know some clients, they cut in half. They only take 50% of the pay in Australia.
Right.
Like if that much, we talk about that much, yes, definitely keep your Hong Kong payroll. If it's only about like 20, because as I mentioned before, the bank will automatically shake 20% off from your Hong Kong pay anyway. So if it's only about 20% or 30% cut, you'll be easier to use Australian dollar because you've got all these lenders we can use. Okay, we have 40 lenders we can use. But if you say, I initially got $1 million in Hong Kong, but in Australia, I've only got like $100,000 in Australian, which is like $500,000 in Hong Kong, I'll definitely recommend to keep your Hong Kong payroll. Yeah, in that case.
If there's not much difference, 20%, then yeah, use it. Australia's job will be easier general than overseas, isn't it?
Absolutely. Absolutely.
Okay, so if worth to try, if you just similar, just use on Australia one. Okay, I've got Sophia asked a question. Can I use offshore income in Hong Kong for home mortgage, or should it be treated as same as PR living Australia? Now, Sophia, my question, I think you need to elaborate. Are you saying you never come to Australia after permanent visa? Can you elaborate?
Hey, Joanna. Yes, that's correct. Yeah. So before moving to Australia, can we buy a home using a Hong Kong income?
Okay. All right. His question is that's very common in a lot of candidates. I'm
not sure whether it's been already someone asked these questions. Just join.
Not specific. No. So specific question is, he's got a permanent visa, let's say last year, right? But he hasn't come to Australia on that visa yet. Can he still use his Hong Kong income now, which is already got it, applying home loan now, mortgage now?
Yes, the answer is yes. Yes, it's definitely yes. We can use your Hong Kong income. It will be easier if you come to Australia at least once, so we can do the verifications of your ID, as I mentioned before. But if you've never come to Australia, I understand it's COVID, very hard to travel. We can still arrange it for you, so you can bring your ID to an Australian consulate or Australian lawyers in Hong Kong and verify that, and we just submit your Hong Kong. We treat your Hong Kong income as Australian income, but with the currency rate, of course, and we shade by 80%. So if you earn $1 million, we just use 800,000 and convert to Australian dollars.
Yeah, so they will cut your income 20%, and then they give you that borrowing power. Yeah. Okay, so I think that's yes. Go ahead.
Sorry. Yeah, just on that. Say if I did my first entry and activate my PR and not really settle down there, right? Just first landing and I just stay there, just activate my PR and then I return to Hong Kong, right? So in that scenario, it's still treated as 80% or it's just treated as a local?
Yep. That's a good question. Yes, well, as long as your income is in Hong Kong dollar, we always need to share 80%. Unfortunately, that's the bank. Yeah,
doesn't matter where you are.
Yeah, it's not to discriminate Hong Kong or anything like that. They just really prevent the foreign exchange rate fluctuations. That's the main purpose.
Yeah.
How about those the mortgage rates and tax and stamp duties, or are they still treated as a local PR or treated as a foreigner?
Okay, so am I just able to answer the question? So as long as you've got permanent visa, you'll be home resident. So you won't need to pay additional stamp duty on that.
Oh, okay.
Yeah. The interest rate will be the same as well. So you're not paying extra interest rates.
Good, thank you.
Okay.
Yes. Okay, thank you, Sophia. If you have anything else, you can just leave a note here. And Tim asked this question: is there any expiry date or pre-approval from the lenders? Given the market is very hot in Australia, very hot indeed everywhere, including Adelaide, could I be able to extend the pre-approval if I cannot find property before it got expired? So basically, he asked this question about he's looking for properties, but not sure whether you can get one.
Yeah, I totally understand that situation at the moment. The answer is yes. Generally speaking, it's 90 days from the time you make the application. The pre-approval, from the time they actually grant the pre-approval to you is valid for 90 days. So basically means the policy, like we also said before, the interest rates and everything they use in the calculation will be locked for 90 days. After 90 days, you can extend the pre-approval, but they do need to make the calculation again based on the situation in 90 days time. But we definitely can extend the pre-approval for you.
Yeah, I think because they already got documents, provided that the circumstance not changed, right? That's
right. Yeah, we might have to provide the documents again, like the income documents. Most of them you don't have to provide IDs and stuff. Yeah, but your pay slips and stuff. Some lenders will ask you to provide them again. Okay,
all right. Yes, I've got another question about okay, so I think you did answer this. How long does it take for home loan? I mean, for preparation of how long they should take to understand how much they can borrow.
So the question is how long?
How long they would be able to find out how much they can borrow?
Oh, okay. That won't be too. If it's just a general estimation of the borrowing capacity, it generally takes. It really depends on how quickly the clients can provide the documents as well. Sometimes, yeah. So normally the broker will send you a checklist, and then if the clients just give some general information, so provide your pay slips back within the day or two, we can give you like a rough estimation on that day. Like basically, that's pretty fast, 24 to 48 hours. That we can give estimation, but in terms of getting a formal pre-approval, that can take 1 to 2 weeks.
All right. Any other questions? Please leave a note here while Sophia. So Sophia, what happens if someone wants to need your help? Because I think it would be better for you to help them. Otherwise, they have to go different banks.
Oh yeah, I'll be absolutely thrilled if I if I
Yeah.
help. Yeah, definitely. So let me quickly have a look. So I'll leave my
Yeah, contact detail, please.
my contact details here. The best way to reach me is definitely my mobile number and WeChat. And I think my mobile number is also my WhatsApp as well, so you can see.
Sophia Wu. So WeChat is Sophia Wu, and then number is, I'll just leave it here, 61412. All right. So perhaps best way to text her first to book appointment, or just send an email first, because they. Oh, so did I send to Tim? Sorry, I just need to send to everybody. You can get in touch, and if you have any questions. So basically, as she just mentioned, that the banks actually need working with the land and so brokers to help with the process, so they understand the process well. I think I have, yeah, yes. About that candidate's credit record, how much does it affect their own borrowing power?
What's that? Sorry, credit
record.
Oh, okay. If they don't have record.
Yes, if they have experiencing, some negative credit record in Hong Kong, how much does it affect?
Okay. First of all, most of the banks in Australia, they want access to your Hong Kong credit report. So
that's good news.
Yeah, so that's good news. Unless we have to go with specific lenders, then they will definitely, if they see your credit report, if you have major defaults, like a home loan defaults or personal loan defaults, they may just say no. Okay, but most of the lenders, they don't check the credit report.
They don't. So basically, our understanding will be just make sure your income is stable, and then it's reliable and stable and consistent, isn't it?
Yes, and make sure your repayments are up to date, because if you need to provide a repayment for your home loan statements, they need to see your payments up to date. If you got missed payments all the time, that the banks can also say no.
Okay. How about some of our candidates mentioned that they have other properties? A few years ago they might purchased apartment, and they just purchase using cash. If they now want a great property in Gold Coast, I like to say that 3-4 million. So would you? So what type of what would you suggest them to take, like from there?
It really depends on what the clients plan to do with the property, like the apartment they've already got. If they're going to rent it out, rent the apartment out, we can, there's different solutions that we can arrange with the clients. It really depends on situations. For some clients, we can get the money from the apartments first before they purchase the Gold Coast property. For some clients, we just use that as a collateral, or we just use the rental income from the new apartments. That also helps with the borrowing capacity to purchase the next property. But if you need to sell the property, like for some clients, they just they won't want it anymore. They just want to buy a property and then sell it, the apartment, after they bought a new property. We can also do a bridging loan for those clients. That can be another whole topic, very complicated, but we can tailor that for the clients as well.
Okay. Final question. One candidate just asked me privately. They say in UK, thank you, Jeff. Thank you. Yes, thank you for your time, Jeff. So UK, that's different purpose for different markets for different purpose. What happens if the candidate, they purchase the property, they decide they want to be primary resident, but 1 year later they want to rent out? Do they need to inform the bank, or will there any change, or is there anything that's affect their own credits?
That's a good question. Yes, it's the same as UK. We have loans for different purposes. In Australia, we only came out with that about like 4 or 5 years ago. Before we had same thing for everything. At the moment in Australia, you don't have to inform the bank. All right, there's no way they can find out if you don't inform that. You should, okay, but you don't have to. And then if they find out you moved without telling them, there's no penalty. All right, there's not going to affect your credit or anything like that. So I think it's different from UK. Yeah,
it's very soft. Great. So okay, yeah. Oh, thank you very much for your time. So everybody, make sure you note down email address if you don't know or forget about that. WhatsApp me or live in our community. I'm able to share this with you. So Sophia will be working with all the banks, give you best recall, best borrowing power for you. And again, always borrow as much as possible because you really can have that cash. Okay, Sophia, thank you very much. Thank you, Sophia, for your time. I really appreciate it. I know that's Friday, you know.
It's a pleasure. I really nice to talk to you, Joanna, and nice to meet everybody.
We should catch up.
We should. Hopefully, we'll stay in touch with everyone.
Yes.
Thank you.
All right. Thank you, everybody.
Bye.
Have a nice evening. Bye. I'll stop recording.